Go to TradeTheMBI.com. This is John's report is for the 7th of July, and the strength of that MBI Magenta leading over both white and yellow in this case, and now you have, we've had it since the crossover blue also above. That's been enough to kind of push things forward. Now we got a dip in the MBI Magenta right there, and that actually puts price over the 23%, and consistent with the expectations. I mean, it's not moving anything dramatic at this particular stage. Still don't have that crossover of midterm buyers here on the DOC. I would expect that to happen. Short-term buyers ticked up, so that should be enough to try and push towards the 38%. But we're right at the same 38.50. It seems to be a pretty comfortable baseline at this particular stage. NASDAQ we thought would overperform. It actually has finished above the 23, and now with the further decline, getting close to the 38%. DOC with the green, not quite, almost crosses, just 0.03 of a point away from effectively crossing over above red, and on a P2 pivot, so that how long sustainable this is given what we're seeing. I mean, nothing has changed from an economic standpoint. In fact, things are continuing to deteriorate, which is actually a positive for the market, because in their thinking that means that the Fed is going to slow down, but it doesn't look like the Fed's going to slow down. So I really shrunk the Euro daily chart to show you how catastrophic this decline has been for the currency like this. To be in the mid-20s here, and then to now be near parity to the dollar is just a dramatic decline, and been pretty clean to observe through the whole setup of it. We could see it building as the Eurozone debt. There's a big difference between Eurozone debt and American debt, simply because the U.S. is, the reserve currency of the world, and that it's traded for most commodities. Not the case for the EU. So where that kind of strength in commodities and everything else is going to attract more dollars, not fewer. Not true for the euro. In fact, with the implosion of economics in Europe because of the higher gas prices shuttering of businesses, this is an inevitable consequence of what will be negative GDP. Throw in the Boris Johnson resignation, it's about to take place, and my projections way back up at the peak of this, dipping down. They tried to hold that 114 to 117 range for a while. That wasn't going to be enough, so we were expecting the 107 range. We got that one, and then we knew that a breakdown there. We knew that 103 was critical range, 103.8 just before the 104, and that breakdown has ripple effects because it makes everything EU much cheaper and everything American much more expensive, which is going to hurt some imports of goods to Europe that come from America, because it makes them a heck of a lot more expensive. And from a gold standpoint, it's continuing under that pressure with the expectation of a deflationary range, but I think that's temporary, because after that range, you're going to get to hyperinflation, in which case you won't be able to get gold fast enough. But then again, will you even be able to trade or use it like they did in the 70s? Don't let you have any of it. And then from an oil standpoint, that dip taking us just underneath that key level of the 100. We'll see how it fluctuates from here, but that is quite a bit of relief from the 120s. I mean, a 20% decline. That's going to help ease some things relative to the already higher prices. At least they're not catastrophic. Of course, that could change at any time depending on any sort of disruption. And of course, that bullishness for the market causing rates to rise again, and that means TLT drops from a treasury standpoint. And from a Bitcoin standpoint, still holding above that 20K level, but just not a whole lot of excitement, nothing really pushing it. We have the moves from the 50K chart like that long, and then the short that came through was very short-lived in that sense, and there's the new long setup that's took from there. And then the 5K chart, you can see where we're at, right in the middle of the road here from the last end of day push up, nothing too dramatic. It was, I think, a little bit choppier day simply because there was a lot of building action as we were, had these great crossovers, but there just wasn't a whole lot of change in price action until finally a little bit later. DOC had to get above negative 7.5 to even create the slightest move. So I would expect more of the same of that. There's still a whole lot of uncertainty because you have to evaluate how quickly things are going to fade from a business standpoint, and that whether earnings, future growth, that kind of stuff is going to impact EPS. So we'll continue to follow it with the charts. As always, though, trade well. We'll talk again later.